Per usual, living on this channel for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. I haven't done one of these in a couple weeks. Kind of ran out of ideas. If you've got specific things you'd like me to talk about, let me know in the comments below. Today we're going to talk about 10 trading axioms for profitability according to ChatGPT. But first, ETH. A lot of people asking me, why are you selling here? What are you doing? As we'll see with the trading axioms, I had a plan going into this that we may see a continuation based on cloud plus chart pattern stuff around 2,500. This is where that measures. Got stopped out on leverage at around 35. My mistake on leverage, less on spot, was I didn't re-add at 3750, which was the fractal breach, higher at resistance, right? So how the fractals work, low, high, low, you get a red resistance fractal, high, low, high, you get a support fractal. If you're breaking support fractals, that is a trailing stop loss. If you are breaking resistance fractals, you're making higher highs, that is a stop limit. This was also setting up as a head and shoulders that never broke down, right? So that was another reason why this could go higher. We talked about this, I don't know, last week probably. And I said there's still a little bit left to go on this based on this target. It's a decent trade. It's not amazing. So here we are. We're still in the wheelhouse of where ETH could go 4 to 5K based on the 2,500 break. That's it. Now, a lot of people are in this camp, which is totally fine and reasonable. It is a longer time frame camp, most likely, potentially the end of the year. I don't think this is wrong. It just wasn't my trading plan for ETH. Now, if you think ETH is going to 10, if you think Sol's going to 1,000, whatever, own it, don't trade it, stake it, do whatever, and deal with it at the end of the year. But you have to give that idea time to work out. When I trade ETH on leverage today with the assumption that it's going to 10, I think that's where the challenge lies. And I think that's where a lot of people's head is. They just assume this is going to go straight to 10. And hey, look, anything's possible, but I doubt it. I think we're going to see an interesting journey towards that level, but that is a high time frame idea. And that's fine. You know, you can trade multiple buckets. You can say, this is my high time frame idea. I'm going to stake ETH. I'm going to hold it. My issue especially is with people who have been saying that since 2020 or earlier and are now taking victory laps on something they've been losing on for years and years and years, right? Based on the Bitcoin pair. So that's ETH. 10 trading axioms for profitability. It's always good to do a refresher because a lot of people either A, haven't seen this stuff before or just don't get it. You know, you sort of need this holistic approach to get to the point where eventually you start to make more money than you're losing, and then you still just lose money pretty consistently, but it's smaller chunks than the winners. It's a lot like poker. Fold, fold, fold. Then you get a good hand. So number one, cut your losses quickly and let your winners run. A lot of people aren't used to managing winners, and I've done lots of videos on exit strategies, but they're so used to managing losses that they're not used to managing winners. They don't let their winners run. And this goes back to the whole ETH idea. Like, I have no issue with it letting this run to 10. Go for it. Absolutely. That wasn't my initial plan on the trade setup. But go for it, right? You need your winners to pay for your losers, because if your winners don't pay for your losers and your losers don't pay for your losers, then you're not winning, right? That's just math. Number two, trade with a trend, not against it. I can't tell you how many people still to this day don't understand the trend. Pick anything. Pick anything basic. Pick the 1050. I like the cloud. We all know that. Do whatever you want, but you need to know, is there a trend, yes or no? And then, is it up or down? Is it bullish or bearish? That's it. If it's ranging, different story. But if there's a trend and you're trading against the trend, you better have a damn good reason why. AKA reversal patterns, divergences, story, whatever. You need a reason. But most of the time, the trend is your friend. And if you're trying to kill your friend, you're going to be losing money. Number three, risk only what you can afford to lose. This should be fairly obvious. And hopefully too many people aren't gambling, but you shouldn't be trading your lunch money, your rent money, your child support payment, whatever. People get in way too deep on the trading side, then they go into options, they think they're a genius, and then they lose it all, and then they're in the poorhouse. Okay, let's not do that. You want to be trading what you can afford to lose. Number four, plan your trade, trade your plan. Again, back to this ETH trade, entry, exit, stop loss. If your entry for the past 4 years was anything in this range, then your exit should probably be up here to make sense, right? Now your opportunity cost has been massive. You've been losing a lot, including the total return, which is what people still fight me on. The total return for ETH versus BTC or Solana It's no argument. It's no argument. But if there was ever a time to trade this to 10 as a breakout trader, it's certainly this. And another thing I see people doing, especially with something like Oklo, I would not be placing stop losses very close to break even. Galaxy's another one. If we are seeing this just starting to break out, you have to give it time. You have to give it time to play out. Let me just pull it up on the other screen here. This doesn't happen in a day. The news, whatever the news is, whatever, it doesn't matter. Your entry exit stop loss needs to be figured out during the trade planning phase, not while you're flying the plane in the air, right? Where's the stop loss going to be? For me, I like holding this until a lower low, in this case, someplace below the Kijun. But I don't like placing stop losses at break even. Oftentimes, trades will start to break out and then they'll just kind of sit there for a little while. So this just happens to be Oklo. It doesn't matter what it is, right? Whatever. You have to give it time to play out and then apply the trailing stop losses. I didn't apply a trailing stop loss on ETH until it was well above the entry. And we didn't even get a trailing stop loss until 28. And we didn't get a second one until 35. And that took 2 weeks, right? So a lot of people are just way, way too impatient with this stuff. Give it time. Give it time. And then don't sabotage yourself by hitting the eject button for no reason, especially if the technicals still look good and you're trading on technicals. Never add to a losing position, losers average losers. I certainly try not to do that. If I'm talking about a long-term idea like Rivian, maybe I'll add to a losing position, but it is certainly not something you want to do most of the time. Most of the time, especially if you're breakout trading or trend trading, you will get your answer fairly quickly, like within the month. Were you right or wrong? So if you're adding to a loser, Sweet Green, let's just pull it up. Great example of one that's happened recently. You got that answer within days. It didn't matter where the breakout never went, right? I wasn't personally adding on that. I know a lot of people, maybe they were, but you had a breakout, looked clean, gave it all back, right? That was within a week. And this is a great example of using stop losses and not adding to losers. Number 6, keep emotions out of trading. Don't become a community member. A lot of people still, they're fanatically following XYZ coin, Zcash. I could go down the list of a lot of stuff. It just doesn't make sense today. Just doesn't make sense. Sorry. Too much competition. Nobody cares. Too many circulating coins. Too much inflation. Fish where the fish are. And that's that. Now, if you like some long-term bucket of whatever, don't trade it. Own it. Don't trade it. It is what it is. You can lose money on it for 10 years. And then on year 11, maybe you get it all back and then some. But don't let that affect your trading. Don't let your investing affect your trading. Just hope that you're a better investor than you are a trader. Use stop loss orders religiously. I'm not religious, so that's an interesting axiom, but you have to use stop loss orders enough. You have to be really good at losing to understand why they exist and why you should be using them. Because if you're not using them, you really don't get it, right? Back to number 1, your winners need to pay for your losers. That sounds obvious, but for a lot of people, they're not even there yet. So yes, you need to be able to afford a bunch of losses in a row, small losses. You can only do that using stop losses. Focus on consistency, not big wins. Another thing I see all the time, people focusing on the next 1000x gem, right? They want to hit not just a single or double or a home run. They want to hit a grand slam in the next ballpark over, in your neighbor's yard, in your neighbor's yard, right? You don't need to do that. You just don't need to do that. You can certainly focus on just the easy stuff. Be consistent, right? Like back to the ETH example. This was, a double, triple, single, whatever, relative to whatever this is. I get this answer in under a month. You might get this answer in 5 years. I don't know, right? It's just a different trade. It's a different mentality. Not saying it's wrong, but if you're trying to time the market, if you're a market timer and a token picker, then you're probably better off looking for very specific setups that have a high probability, have a high win rate based on what you're comfortable with. Protect your capital above all else. Number 9, this goes back to trade size and risk management. You need some sort of consistency there. Are we trading the entire book on every position? Probably not. Probably not going to do so well on that. Are you trading a percentage of capital? Are you trading a percentage of capital based on the idea, based on momentum? What are you doing? You got to do something. You got to pick something. A lot of people just pick a flat number. I'm going to trade at X dollars every trade. That's fine too. But you need a measuring stick. You need a benchmark. You need something. From experience, it just makes it easier because then you don't have to think about, okay, I found this great idea. I found this great setup. Here's my entry. Here's my exit. Here's my stop loss. Oh man, now I got to figure out what's the size. Oh man, I don't know. right? If you just remove that from the equation, if you're Steve Jobs every day and you wake up, you put on your black turtleneck, one less thing to think about. And then lastly, number 10, review and learn every trade, win or lose. This is journaling 101. If you're not keeping track of what you're doing, how do you know if you're even profitable, right? So on the back of this, I did see 2 other interesting lists. I'll just leave the links for these in the description of this video. I don't know who Stan is, but by all accounts, great trader. And it sounds like he's doing a lot of what this channel is all about, looking for specific setups on high time frames. So these are his buy rules. These are his sell rules. Never average down, use stop losses, don't get emotional, be consistent, etc. I thought this one was particularly interesting. Selling is your edge. Anyone can buy. The pros separate themselves by selling with precision and discipline before a small loss or dip turns into a disaster, right? Disaster. And then there was also this one I came across. I'll leave in the description as well. I think it's important to pay attention to the people who have done well, the people who have actually made money over time consistently. Not these people who have done well once and act like they're permanently nostalgic because they were the high school quarterback and now they've done nothing with their lives in 20 years. You know, I see a lot of that on social media. I see a lot of that from the macro doomers. They might have hit a home run once or twice, but their average is extremely poor. Doesn't even beat the S&P, right? That's all for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.